Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So we have hit yet another one of our targets for this stock market crash. We were looking for a move down to this level, back to this reaction low right here, which is exactly what happened. You can check out my last video and I highlight this red line right here, and I talked about the fact that this would trigger a sell signal. Any move below this red line would trigger a move down to this 2,400 point level. Now, unfortunately, we weren't able to trade this in the intraday chart. So if you have a futures account, you were able to trade that move from the red line all the way to that support level. If you do not have a futures account, that means you had to wait for the gap down, which was right here on this red candle, and you could have got a nice, I think it was a 4% profit from the open of the candle to the close. There you go, a good 4% profit. And for a one-day trade on the S&P 500, in my experience, a 4 to 5% profit is a tremendous gain. And this is the new norm. This is the new S&P 500. We have huge moves up and down, big gaps as well. So there's definitely a lot of money to be made, a lot of profit to be made, and that will continue to be the case for a while. But I do want to raise your attention to something, that when the markets are making such big moves, you need to keep your position size reasonable. You need to adapt your position size to the current market. Obviously, the bigger the moves, the more you will risk. When there are bigger gaps, your stop losses will obviously be less efficient, and you can lose a lot of money within one day just because your stop got gapped. Now we have hit support right here. So these two lines, this 2,400 point level and this line right here, are two support levels, and I'll call this a support zone. And we can go back all the way in 2017 right here. You can see we did have a few reactions back here. So we're all the way back down to this support level that we created in February 2017, so all the way back here. And that again shows you that all the people that invested from this moment on, 2017, beginning of 2017, all the way to this top right here, have lost money or have made absolutely nothing from their investment in the S&P 500. So the lesson to take from that is never be in a rush to invest your money. Make sure the markets aren't able to just pop like they did right here in 2020. Before I continue, make sure to like and subscribe. It does help me out tremendously and makes the effort that I put into these videos worthwhile by bringing more people to the community. So now in terms of technical analysis, in terms of what's going to happen in the next few days, I am expecting some short-term upside. I do think that we're going to see some type of a rally from this support level. This is clearly a level at which I expected a reaction. This was a target of mine from a long time ago. We reached the target. Our profits have been booked. Now, I do want to be clear. I am expecting more downside in the future. If you haven't watched all my previous videos, I do cover the longer term aspect on the S&P 500, and I do expect a drop down to about 10% below the lows that we've already made. Now, I wanted to show you the weekly chart to remind you exactly what is happening in the longer term. Recently, we got the break of trend line that we were looking for a long time on the S&P 500. So this was our long-term sell signal. So I have been long-term short on the markets since that break of trend line. And these are my first two targets, this 2015 support level right above the consolidation we made during 2015, and this is my second target below the consolidation. Now for now, this support zone is still acting like support and it has not been broken yet. However, if the price starts to break this support, it will obviously trigger another sell signal for a move right to the next target. And a solid daily break of this support zone would likely make me add to my shorter term shorts for a nice move down to this support level. As I'm going to explain in this video, I don't think this is the likely scenario for the support zone to break just yet, but it is definitely a scenario that I am prepared for and that you should be prepared for, because this is a long-term sell signal that tells us that we should have a bearish bias in the markets. But now I am expecting some type of a reaction. Now, obviously, anything can happen in the markets. We can just continue on down, but that's not how typically things go. And as you know, technical analysis is all about probability. During corrections like we're seeing right now, there are waves of selling and there are moments where the price consolidates or bounces back up. And I think right now we've seen the first wave of selling, the first counter rally. We've seen the second huge wave of selling, and I am expecting some type of a counter rally from this support level. If it does happen at one point, it would be off of this support level. Now, I do have reason for this. I'm not just blindly saying that the price is going to bounce off support. That is definitely an objective thing to say, seeing how strong the support level is. But there is divergence on the RSI. You can see right here the price is continuing down while the RSI is actually making a series of higher lows. And you can see that is something that we had right here. It wasn't exactly the same thing, but the price did continue on lower. As you can see, we had a series of lower lows while the RSI did make a series of higher lows. So when I see this, it is a warning sign for me to stop going short. So I'm going to limit my short positions from now on, seeing this divergence, how developed it's become. I do want to see some type of a counter rally from this divergence. I think we've had the second wave of selling and it's been very aggressive. In fact, you can see the momentum indicator, the MACD, is very, very far down. So any upside right now would flip the momentum and start bringing us a little bit higher. In my perfect scenario, the MACD would do something like this, get back up to the zero line. You can see this is the zero line, and then start the last wave of selling as we approach the zero line right here. And if you've been following this channel for a while, you'll know this is something I use a lot in my trading to define whether a stock or a commodity is going in an uptrend or in a downtrend. If the MACD remains below the zero line, we are officially in a downtrend, and the zero line can often act as a resistance when tested from below, or as a support when tested from above. You can see right here it did act as a support. We bounced off of the zero line and continued the uptrend. You can see right here. So I'm going to clear this chart and show you in more detail exactly what I'm expecting from this bounce. So you can see right here I drew up a wedge pattern right here because that is exactly what's forming on the daily chart. In fact, you can also see this on the hourly. We do have a downtrend line with many reactions. You can see all the candles are stopping right on this downtrend line. So as soon as we have a solid break of this downtrend line, that would spark some type of a recovery rally. My target zone for this counter rally would be somewhere between this red line, this red resistance level, and this one here. And that corresponds to a nice gap we had a few days ago. So the bottom of this gap and the top of this gap would act as a resistance level for the counter rally to stop and reverse back down to potentially lower levels. So that's about all I wanted to cover in this video. So I am expecting more downside in the future, but for the short term, shorter, intermediate term, I am expecting some kind of a bounce off of this support zone. So that's the summary of it. I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.